Bitcoin is inefficient. Bitcoin is slow, but Bitcoin is the only cryptocurrency that can attract these multi-year long-term holders. In this video, we are going to look at data such as the adjusted realized price that shows how the Bitcoin price reacts whenever it drops by 50, 60, 70%, when it then recovers. Where might we currently be in this cycle? So we're going to look at on-chain data at several charts that are very, very interesting in the long-term cycle of Bitcoin. And let's start off with the adjusted realized price. Now, what are we adjusting here and what is realized price? Realized price is the price that Bitcoin in aggregate has moved in the past. So when you look at the current price, it's simply just the recent trade that has happened, right? Whoever sold Bitcoin in the last second and whoever bought it, that's the current price. But there are a lot of people that bought and sold before, and they sold, for example, when you currently have a rising price, they sold for lower prices. And if the price is currently falling, they were buying and selling at higher prices. So the realized price is somewhat of a lagging price. It just looks at the market in aggregate. And when we look at that realized price, we can see in aggregate where is currently the investor standing. So when the realized price currently is below the current price, then the market as a whole is in profits, right? So the recent person that bought, they bought for more than the average price and vice versa. So that's interesting because psychologically speaking, right, when you are currently in losses in Bitcoin, but you still believe over the long term that the tokenomics of Bitcoin are sound, that Bitcoin will stay around, that the inflation is lower than of fiat, etc. You think over the many, many years that Bitcoin will appreciate. That means when the current price is below the realized price, and the market is at losses, that most people are likely going to simply just wait out those losses. They are okay to not sell. You would only sell if you're panicking and you think Bitcoin will go to zero. But if you think that you can hold Bitcoin over the long term, then you would not be selling when you're currently in losses. So looking at the realized price relative to the current price is a very useful tool to basically establish how much sell pressure is there currently in the market. And let's look at this. The realized price here is in blue. And currently the price is above the realized price. In other words, people in aggregate are in profits. Now, there is an adjustment here, the adjusted realized price. What is this adjusting for? That's this orange line here. It's adjusting for the people that have likely lost their Bitcoin. So when we look at the wallets that haven't moved their Bitcoin in the last 7 years, then it's very likely they've simply lost their keys, right? You might otherwise maybe move your Bitcoin from one wallet to the next, maybe to a new hardware wallet, maybe you move it to another kind of cold storage that's a bit safer, maybe you implement multi-sig, etc. If you haven't moved your Bitcoin in the last 7 years and Bitcoin went up by all of these multiple X's, it's very likely you simply can't move the Bitcoin anymore. And so we can basically disregard these kinds of profits from the analysis, and that's what this adjustment here is doing, the adjusted realized price. And that's currently at 25.2K. In other words, the people that haven't lost their Bitcoin, they are not really that much in gains right now. Whenever the price is below, we have less sell pressure. Currently, I'd still argue, since the gain is so little, that the sell pressure is still very, very low. In other words, when we look at this historically, right, this chart starts in July of 2018. Whenever the price was below that adjusted realized price, it was a very good time to dollar cost average into the market. Then we usually saw the price appreciating afterwards. This is also here during the Corona crash, and then all the run up here up to 60K and then 69K. This all happened after we could accumulate below that realized price, below that adjusted realized price. And currently we are still very close to that. In other words, if we now look at the next charts, it's very likely that we're going to see people not yet selling, that we're going to see an expansion of the long-term holders. And that's what we can actually observe over here, the last supply active H band. So this is now splitting up the Bitcoin according to when they have last time moved. As in, has it last time moved 1 year ago or 2 years ago or 5 years ago? And we look at how much percent of all of Bitcoin is actually in these kinds of wallets? So let's look at this, right? Last active 1 year ago. This is increasing. In other words, the supply is getting less and less liquid. More and more people have not moved their Bitcoin in the last year. This is now at 68%. If you look at the last 2 years, it is at 55% roughly, then at 40, then at 29 for the last 5 years. You can also see when we look at the last 5 years, this is less volatile, right? So there's more and more people now that hold their Bitcoin for at least 5 years. Once you look at the 1 year, this goes up and down a bit more, but still this is at an all-time high, and this is positive. The higher this is, the tighter the supply is, which is positive. The less there is floating around, the more appreciation we can expect. Here's another way to look at this, the long to short-term holder threshold. So Glassnode, where these charts are taken from, looks at a measure called long to short-term holders, and they make the cutoff at 155 days, because when they made an analysis in the past, they figured out, okay, 155 days is pretty much the threshold where people turn from the short-term speculative money to the money that just allocates to Bitcoin, that simply just has a portfolio and that tends to not trade that actively afterwards anymore. So after the analysis, 155 days it was, and that's now after the FTX collapse. So we've got two crashes here in Bitcoin, right? This was the Terra Luna collapse, this was the FTX collapse, and now we see that long-term holder threshold is post those two events. We can see how this is nicely, steadily increasing. More and more coins get into long-term holders' hands. And so we've got another way to look at this. These are the realized cap hodl waves, and we can see that the people that hold Bitcoin for at least 2 years, 2 to 3 years, these kinds of people are expanding in quantity. Or to be more exact, the Bitcoin that is held in wallets that haven't moved or that haven't had any activity, that's expanding. So what's really happening here is when Bitcoin isn't making new all-time highs, people simply just wait out the bear market, which makes a lot of sense. If you expect Bitcoin to still be around in 5 years, which I think is very likely, and at the same time you expect that the monetary supply will expand over time, that Bitcoin is basically something like digital gold, then you can wait bear markets out. Then there's no need to sell during bearish times. And that's what we are seeing in the data. More and more people hold, and this is likely only going to come down when the Bitcoin price is hitting levels of at least 60K, maybe even higher. Now there is a very good website, lookintoBitcoin.com, that has these charts, or some of those charts, in an interactive way, and we can toy around with this. And let's look at this one over here, the hodl waves of lookintoBitcoin.com. You can see, for example, that the 10-year hodl wave is increasing with time, or in other words, the fraction of Bitcoin that hasn't moved in the last 10 years is ever increasing. So more and more Bitcoin as a fraction of all of Bitcoin is likely being lost. Now we can increase this further. The Bitcoin that hasn't moved for at least 7 years, again, a steadily increasing function. So even though there is mining going on, even though more and more Bitcoin is hitting the market because people mine Bitcoin, electricity and computational power is expanded in order to get these new Bitcoin that are being issued. Even though the supply is expanding, more of that supply is actually being lost, because this is not a number of Bitcoin scale, this is a percentage scale. Now let's look at the Bitcoin that hasn't moved for at least 5 years. Again, a pretty monotonically increasing curve. Very few blips over here. In general, more and more money, more and more Bitcoin does not move. Now this only changes once we add the Bitcoin that haven't moved for the last 3 years. So in other words, when Bitcoin doesn't move for at least 5 years, this is pretty much locked in. These people are not even trying to ride those waves, even though the Bitcoin price waves can be massive, right? Bitcoin can easily drop 70, 80%. The people that don't move their Bitcoin for 5 years, they simply just allocate and they don't care what happens to the price. They might be selling maybe in 10, 20 years, but in aggregate, this portion of people that hold Bitcoin for at least 5 years is increasing. Once we add the 3-year people in here, now we've got also the supply that rides the waves. And let's also look at the Bitcoin price at the same time. When are those people actually selling? It is when the Bitcoin price is running up massively. Okay, so when we went from $240 all the way to 20K, that's when you see some people starting to sell. At the end of a bull market, that's when the 3 to 5 year people are selling off. And then when the bear market is established and we are very low, then they continue to accumulate again. Now this is very bullish because now we are at a all-time high here again. In other words, Bitcoin is very tight still. We are not yet high enough for this cohort to sell. And again, the more Bitcoin that's not being moved outside of wallets, the less additional new entrance it needs in order to generate new all-time highs. Now we can toy around with this further at the 2 to 3 year people in here, at the 1, 2.5 year people in here. The shorter you go with the holding duration, the more you see those positive and negative waves. But overall, the idea is if you simply just hold for long enough, you can pretty much wait out any bear market. That's what's pretty unique for Bitcoin. That's not something that you can say for any altcoin. The altcoin that might be rallying in 2 or 3 years might be very different from the altcoin that was popular 2 or 3 years ago. Very few people are still talking about Bitcoin Diamond or about Dash or about Ethereum Classic. The last bull run was rather about Solana or BNB or Avalanche or Phantom. So really with altcoins you have to speculate, you have to sell them when they go down because you cannot really be sure that they will recover. That's different for Bitcoin, and that's why I think it makes more sense if you've got larger amounts of capital that you don't want to risk 100% to simply just allocate this to Bitcoin and to, in the end, dollar cost average into Bitcoin. We discuss the macro cycles regularly in our Telegram and Discord, so feel free to check those out. Those are down below. Feel free to also have a look at the premium membership where I share what kinds of trades I do, where I try to outperform even just buying and holding Bitcoin and get some kind of alpha on top of that. Another video regarding how to time the cycles comes up next. It's one of the most successful videos on this channel. That's over here. Looking forward to seeing that video, and thanks for watching this one. Bye bye.